Hi guys, John here, Forex Fire, part of the Ninja Forex Traders. What I want to talk about just before the markets open up later on tonight, I've been at work today and just yesterday I did a chart markup. Okay, just a little prediction on what I think how the market's going to open up. Again, we can't predict 100%, but with the education that we have, we can sort of get a good idea of where the market structure, the way the market moves. Okay. Now, what I'll do is a little bit later, I'll probably do a video after this with regards to risk management, money management, and how to sort of trade efficiently on your account where you're, one, not over trading, and two, sort of giving you a proper relation to a proper trade plan, okay, where you should know what you're risking to rewarding, okay, because you don't want to go into trading blind, because then you're just throwing money away, to be fair, okay. But for now, we're going to go and have a quick look at the chart and something that I drew up late yesterday, and then we're going to do maybe we'll probably jump onto a pair and do a live sort of draw up, okay. So again, I do these on the fly. It just I do pre-record them, okay. So I'm just going to head over my screen. And that's why you see the bloopers that I do every now and again as well. So this here, guys, was the Australian dollar, US dollar. Now, there's something I've been learning from my Forex mentor with regards to zigzags, okay? And you'll see here we've got all these highs and low points done off. These here are just simple, okay? Simple rays. And what you're doing with these rays, you're moving from the high point, you bring it down to your next high point, okay? This will give you a forever and beyond sort of trend line, okay? Same with this one here. What we've done here, we've took our area, we've got it from the low, we sort of mark it up, and at this, when I did this was marked up along here, okay? So even though it would have touched this along here, this was when I'd marked this up. This highlights sort of your pattern here, as you can see, a left shoulder, you've got a low, we've come back up, retest the right shoulder. So just go on here, that would have been an LS. Okay, I'll just get this marked a bit more. Get this pink. That's an LS. And then you've got your low. Okay, that'll be your head. And then you guessed it, you've come back up to retest this area. That would be your RS, okay? And as you can predefine and see those, you bang, 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 bosh, bosh. And then we have it again over here. You've got left shoulder, low. So that's a left shoulder, head, bang, retest, right shoulder, okay? But again, take notice of what's happening up here. We started coming up into this movement. This hasn't formed just yet, okay? So we go heavily on X marks a spot. And up on this top here, this is where price would possibly come to. Okay, so what we've got is a harmonic pattern forming. Okay, the harmonic pattern is forming. You've got your X, your B, C, and then D. We've got this maneuver here. So this here, from where the market is at the moment, when it opens up, if it does push up to that X marks a spot, you're looking at around 120 odd pips plus. Okay. So hopefully you've seen that sort of chart lower down on my time frame. Let's head over to something else and see if we can mark something else out for you. Let's go to USDJPY again. Right. Let's just have a quick look back on this. First of all, what I can see is a nice W pattern. Okay, let's just draw a couple of things out for you. As you can see, you've got a W, okay? Got a nice W pattern, so we're going to work from this. There's one or two things you could do with this. First of all, when you get W's or M's, you could sort of do this, okay? It doesn't have to be precise, but you can see you've got some form of harmonic pattern there, okay? But let's just get rid of that. What we'll do is highlight this up a bit more. This will be our focal point. So we'll just go on here and do the XABC. We'll do from the high point down to the low. up to the swing high to B, to C, and then up to this point here. This is higher than what this is because you've had a bit of a down maneuver, okay? So from here, guys, what I can see, another thing what I want to highlight is this here. You've got a little bit of a downward channel. See this here? Let's see if I can maneuver this out. You've got a bit of a downward channel, okay? And you broke out from that. You've had the retest. It's come back up. And then again, you've got a little bit of a flag. Sort of maneuver coming back down here. Okay. Again, this may either do a push down, then bounce out of that, or we could get a further down maneuver on this W pattern, okay? I'll just get rid of this. Get rid of this, because there's something else I want to talk about is when you get these sort of maneuvers, okay, let's just have a look. You've got your A, B, C, okay? The A, B, C, you've got your push, you've got your correction, and then you've got your impulse. The impulse move is always the stronger part of the leg out of the ABC, okay? So we got that, and as we done this ABC, okay, we broke structure, okay? We've broken structure. So what I want to do is from there, once we've broken structure, we go down here and we identify a banker's candle, okay? So a banker's candle, in this instance, as you can see, it's the last down maneuver before the buy, okay? And again, you can identify these anywhere on the charts. Again, there's one here. On the downtrend, it's the last down before the impulse. As you can see on here, you've got an A, B, and then you've got the impulse move, okay? The C leg is always more than what the A or the B is, okay? So from that, you can identify this as being a banker's candle, okay? And it's the same throughout the whole of these. Again, you've got here, you've got the last down before the buy. This here is a very good banker's candle. It's an engulfing one, okay? Again, you've got the A. Let's get this correct, John. Get this correct. No, I got that wrong. I do apologize. I'm looking at this from the wrong angle. I do apologize about this, guys. Let's just head back over to this side. We'll focus on what we are in the present, okay? So what we've got, we've identified this here as being a banker's candle, okay? So my next maneuver from here is I'm looking for the A, B, C. Going up, we've got a bit of a correction here, okay? And then the C maneuver here. This here is broken this structure, okay? We've broken this structure here. Get this magic wand out. This right here, where we've done the initial push of here, come down to B and then C. Here is higher than this sort of structure here, okay? So there's one or two things I'm going to look at with this. We're just going to get the fibs. And just see if we can sort of colorate something. First of all, I'm looking in this impulse move, okay? And I can see between here where you've got, let's just blow this up, guys. Massively blow this up. Right. So I can see here, between here and down here, there's a bit of imbalance, okay? So we get this here. Let's just pull that there. Knock that out. Make a bit of a tan color. And then we'll come back out. This method why I do this is sort of confirmation on sort of things that I've been learning with banker strategy and things like that. What we want to do is obviously make our fibs, draw our fibs out. And obviously that's where we had the breaker structure from here, okay? So just go to highlight, go to fib retracement. We're taking it from that to low, and we're going to that high. Now look at this, guys. Look at this. Target area for a bankers, okay, for just to get a little bit of extra confluence, okay. We've done the fibs from the lowest point, which is the C, up to where you've had the break of structure candle where the correction's starting to come down. Now look at this, guys. You'll see two orange lines, okay. Look how much that is balanced, or the target zone is right on the imbalance, okay, guys. This is fantastic. This, let's just have a look at this one. Scroll back out. So what we want to do is we can set a little bit of a target up, long position. We can say, right, we're going to have, let's take a look. This area here. You've got around about, what was it, 22 pips, I do believe. And then you're going to go to a sort of area of interest where you've got, let's take a look, this sort of stuff. Equal highs, okay? So let's say we took it to there. Big target, I think, to be fair. But again, that one there's 11.34 to 1. We'll keep this on, eh? We'll see what happens, see if it plays out, okay? Again, you could technically do it from here. I suppose we've had the spike on here, taking out the liquidity there. Again, from there, let's just put the money onto there. That's a target there, okay? So again, guys, this could mean I suppose I could roll this onto a risk to reward sort of stuff, okay? So I think we will do. I think we'll tie this video all into one, okay? So let's just get rid of that noise then. We'll keep this on our... So there's two charts that I've got sort of targeted for us, okay? Again, if you're going to follow along with this, I do urge you to do this via a demo if you want to take any of these trades. I'm not a professional trader. I don't profess to be, and I'm not a financial advisor, okay? Although I do sort of trade, and I can be profitable at times. We have losses as well as we have wins, okay, guys? So from there, let's just go to my FX book, okay? Just let this load up. The currency, I've got this in Great British Pounds. Let's just say, for argument's sake, you've got 1,000, whether it's 1,000 pounds, $1,000, 1,000 yen in your account, okay? Let's say you want to risk 2% of that account, okay? What you do from there, this is where your proper risk management comes in. Go back to your view, okay? Let's just measure this. We've got around about 12 pips there. So your pip size of the stop loss is 12 pips, okay? Your currency pair is USD, Japanese yen. Let's just highlight this. USD, Japanese yen. And then you click calculate, okay? Now this will give you what lot size you need to risk, okay? Now, this is very important. Whenever you have a trading plan, whenever you are trading from pair to pair, okay, your lot size will change every trade, simply because, okay, you have got a different stop loss. If you're doing this sort of strategy, different stop loss, you apply all that. And I'll run this over again. Let's just go to share screen. Like I say, you've got, for argument's sake, 1,000, whatever, in an account. You want to risk 2% of that balance, okay? You measure your stop loss. In this instance, it was 12 pips. You are happy to lose 2% of your balance, okay? Okay, 2% of your balance on this particular trade. And then you click calculate. This will tell you what lot size to use in your account. This would tell you a 0.23. Okay, so we've got that bit clear. That is on my FX book on the calculator. Okay, so on top of that, just go to share screen again. From there, guys, if you risk 2%, right? If you risk 2% risk, your gain, you will gain back on this, okay? We'll just round it down to 11 to 1, okay? You would gain back a nice 22% growth. Oh, okay. If you were to risk 1% and it won, okay, you would get back 11% growth. What that means, if you lost on 2%, okay, that means you've just equaled a 2% loss. Okay, very easy, very easy. And again, if you lost on a 1% trade, let's get this, lost on a 1% chance, okay, it means you've only lost 1%. Very simple, guys, okay? From there, it's imperative you do not overtrade. That is something I cannot instill inside of you. It's something that I cannot sort of train you on. That's all about your mindset, okay? There's things such as revenge trading where you've lost so many and you're going back into chase a trade. You might have lost on this particular pair. You come out and you think I can get back in and trade it again. For me personally, if I've lost a trade, I've lost a trade. Walk away from it, okay? Don't get back in on it just because you think the market's going to turn. Never trade without a stop loss. Always set where you are happy to have your account sort of stop you out, and always only risk 1 or 2%. Okay, guys? And again, we're just going to quickly go back over this as well. From here, guys, okay, again, we have got 1,000, like I say, 1,000 you're going to risk out of your 1,000 account. Again, your account may be smaller, maybe higher. You just put in the amount that you have in your account at that given time, okay? The amount you are willing to risk on that particular trade. I would normally not risk more than 1 or 2%, to be fair, okay? Measure your stop loss, okay? Again, measuring tool. Measure your stop loss. You've got that in there, around about 12 pips. We put the 12 pips in. Calculate. On this instance, it's going to tell you here, 0.23. Forget about the 1. I will just take it down to the nearest first 2 digits. On this instance, it's 0.23. Again, conservative. If you started with a $500, £500 account, click calculate on 12 pips, you're going to have a 0.11. Again, if you are starting with something even as smaller than that, £200 or $200, calculate, you're going to risk only 0.04. Okay, guys, so this is an absolute fantastic tool. It's my FX book, okay? From there, you're going to, where are we at? Forex calculator. So it's my FX book, home, highlight, Forex calculators, and you can just watch this video over and over and over again and then put in these sort of parameters into there. And again, guys, it's not always about taking the same lot size, okay? If you have got a proper trading plan and you're doing risk to reward and you want to risk a certain amount of your account each time you are trading and you stick to that plan, this is the best thing you can use to help you with that, okay? So again, guys, from there, I hope this video has given you a little insight on things like risk to reward. Okay, again, with certain strategies like this sort of stuff, what I use, which is the banker sort of stuff, or smart money concept, or whatever you want to call it. Yes, you're going to lose quite a number of these. Okay, you will lose You've just got to get in the mentality of the probability side of things, okay? If you've got all these things stacking up in your favor, where you've got imbalance and things like this happening, you've drawn out your fibs, this is slap bang on the money for that imbalance. Price has to come back to here to collect that money at some point, guys. So that is a very strong probability of an entry on this particular sort of thing, okay? You've got equal highs, equal lows. There's certain sort of parameters that you can sort of stack up the chances in your favor, okay? So maybe this is one to put on your watch list with regards to a trade idea. Okay, don't forget we done another one the other night with regards to where we at. See if I can find this one here. Again, I mean, this one, X marks a spot sort of thing. This one is, there's not as much sort of probability stacked on that as what there is on this one. But again, guys, what I'll do is actually, I'll stick this in here. Right, USDJPY. We'll put buy limits, Henry. Right, so we'll do an Henry of 105.307. I'm going to put 310 for this, guys. Okay, rather than 307, just for broker spreads and things at 310. Stop loss, I'm going to put as 105.1. Yeah, I'll just keep that as. And then the area of interest, we've got TP 106.657. And what I'll do is I'll leave that in there and I'll publish this on my wall as well, okay? So again, you only want to risk what you're comfortable in, okay? Again, you just need to get into the mentality of, if this loses, I've only taken out 1% of my account, okay? I see a lot of people that are putting in a lot of sort of different stop losses, different sort of pippage and things like that. They're not working out their risk to reward. Again, even if you lose 4, 5, 6, 7, even if you lose about 8 or 9 of these in a row, okay, all you need is to get at least one of these back. Let's say I've lost 8 in a row, okay? I lost 8 in a row. So I've lost 8 in a row, and I'm down in the dumps. I'm thinking, oh, it's not going for me. That's 8 losses, okay? 8 losses where I've only risked 1% on each trade, okay? This one comes in and hits my TP area. So I've got 8 losses and 1 win, okay? That 1 win with the 1%, okay? That 1 win on this 1% got me 11% back, okay? That's given me a growth of 3% on my account, okay? Even though I've lost 8 in a row. That's the sort of the mentality you need to get in. It's stacking the probability for you. It's going for you, okay? Again, a lot of people just after 8 trades or so like that would think, I'm getting out of this. It's not working for me. It's no good. You have to have a proper trading plan, okay, guys? Like I say, I don't want to ramble on too much because this is going on a bit too much now. This here, like I say, when it comes to bankers and things like that, risk to reward is very good on in this sort of strategy. You've just got to apply yourself and learn the techniques and things like that. Again, I'll be posting a few things on my wall from my knowledge of it. I sort of urge everybody to sort of go out there and sort of learn some things. With regards to what I do on a bigger picture, if you are part of the team and things like that, there's a great platform which you should all know about, where you can get on and learn more about this with regards to that sort of strategy, okay? If this is something that is sort of giving you an interest and you want to know more, all you need to do is just comment below, get in touch with me, or if you're seeing this on my YouTube channel, just click on one of the links within that channel and that'll take you to my Facebook page, or just fill out the information on the funnel that I have on there as well. That'll just drop me a message, just tell me that you want more information, okay, guys? So hopefully you found this a little bit of educational, informational, and if you're enjoying the content I'm putting out there, please let me know, comment below. Again, thank you to everybody that watches my stuff. And if you're watching this on someone else's timeline right now, get back that person who's kindly shared this. They'll get you onto the path to success with this great community that we are part of. Okay, we all learn together, trade together, and we win together. Okay, we take some losses as well, but we have a great community. Okay, so again, looking forward to the markets opening up at the start of this week for tonight, and we'll see how this pans out. We'll maybe revisit this at some point tomorrow when I get in from work, because I'm at work tomorrow, and we'll see where this one has taken us. Okay, not only that, we'll see where the AUD, is it the AUD? Let's take a look. Yep, the AUDUSD. We'll see where that one's taken us as well. So there's 2 trades on the watch list at the moment. So again, guys, thank you for your time, and thank you for your comments and engaging with the stuff that I do. We'll catch you later. See you later. Happy trading for this week anyway, guys. Catch you. Bye.